Delayed financing is a product that's available to buyers who have the ability to pay cash, but don't necessarily want to keep all their cash in the home. So they pay cash for it, making their offer really competitive. And then they have the ability to take advantage of delayed financing and get that money back into their accounts. How competitive are you if you're offering to pay cash? The seller sees that and they think to themselves, no appraisal, no underwriting, no, this time-consuming process that buying a home can be. This guy's offering me cash. Mm-hmm. So that really can make your contract, your offer, very competitive and beat out several others.
What are some of the criteria that a client would have to meet in order to leverage that strategy?
So the lender requirements for where the funds can come from, it just has to be borrower's own funds. So it can't be that you've taken a loan from another bank and you want to pay them back, mm-hmm. but it can come from your personal savings or 401k or IRAs, CDs, anything like that.
Well, what if I think that a lot of retirement funds and those kinds of savings accounts will penalize me if I take my money out. So wouldn't that be an issue?
It could be an issue if you didn't get the funds back within 60 days. So, for example, we had a client that was literally just closed, sent me their paperwork the next day. We started processing the loan. They had their money back in their account within 30 days. So there was no penalty. And then documentation-wise, it's the normal documentation of applying for a mortgage. But in addition to that, you're then showing the settlement statement to show you bought the home and that there's no mortgage on the home. That's how they verify that you've paid cash.
Are there limitations on the kinds of properties that are eligible?
It can be a primary residence. It can be a second home. It can be an investment property, single family, condo, just no manufactured mobile homes.
Got it. Okay.
The last client that used delayed financing was purchasing a cottage in Southern Illinois. It was a longtime client of ours, decided to pay cash for the property so that they could put in a really competitive offer. They sent us this settlement statement showing that they had paid cash for the property, and we immediately started working on it. Got their cash out refinance process and their money back to them in time so that they did not have any IRS tax ramifications with their investment account.
And how long did it take you to get that cash back in their account?
22 days. They had the cash back in their account. As soon as they closed with their cash transaction, they then were eligible for 80% to take the cash out. So essentially it was like they would be putting 20% down on their purchase, right? Mm-hmm. Well, the appraisal came in a little bit higher. Mm-hmm. It appraised for higher than they actually paid for it. So they were able to recoup even more.
Oh, wow.
The lender will allow you to use the new appraised value up to 80%. It just can't exceed what you bought it for. Yeah. Your new loan amount can't exceed what you bought it for. But so you have the benefit of this new appraisal to use in your favor too.